Market Prospects, delivering timely information and education to prairie farmers for over 30 years. Market Prospects is brought to you by the University of Saskatchewan's Department of Agricultural and Resource Economics and these sponsors. Log on to marketprospects.usask.ca to view past programs and for information on upcoming programs.
Welcome back to Farmgate. For this week's edition of Market Prospects, we're joined by special guest Dr. Robert Johansson, Chief Economist for the United States Department of Agriculture. Dr. Johansson, welcome and thank you for speaking with us here in Saskatchewan today.
Well, thanks very much for inviting me to go over some of our more recent forecasts.
Absolutely. We've got lots of questions for you, so let's jump right in. Dr. Johansson, tell us about the current global stocks, trade, and prices for wheat, feed grains, and oilseeds. What are your expectations, regarding trade in these commodities for this crop year?
Well, certainly that's a question that folks are interested in, have been asking, and we've done a lot of looking at this for this year's crop, this year's global crop, of course. And if you may notice in some of my responses, I'll glance down from time to time just to make sure I have the right numbers. But for most of these commodities, this is a story that we've been, working on over the last year or so. For the most part, high commodity prices following the historic drought in 2012 for a lot of these commodities has led to increased production. We've seen global production for wheat, coarse grains, and oilseeds approaching record levels over the last couple of years. In particular, for the wheat crop, we are projecting roughly a global wheat crop of 680 million metric tons this year. Global ending stocks are projected to increase for a third straight year to record levels. That's up to 229 million metric tons. Wheat stocks as a share of total use have risen for the last 3 years. And that's up to about 32.4% roughly. That's high, but remains still lower than the levels we saw at the end of the 1990s and early 2000s. As a consequence, we've seen softening in wheat prices. We're expecting to see a wheat price this year right around $5 a bushel. Again, down from historic record prices from a couple years ago, but still above what we were seeing back in the late 1990s and early 2000s. As a result of strong growth in demand, we're expecting to see near record trade. Last year we saw record trade, but this year we expect that to be down slightly as a result of the large wheat stocks that we are seeing on the global market. Turning to coarse grains, this year we're expecting coarse grain production to be slightly lower than last year's record. Last year's record was about 1.3 billion metric tons, and that was driven by a huge crop in the United States, China, and South America. Coarse grain ending stocks, as a result, in 2015-16 are projected to be at their highest level in nearly 30 years. And those, as a result, we are seeing softening in prices, and we're expecting to see a U.S. farm price of approximately $3.60 a bushel this year. That's below, again, the records we saw a couple of years ago, but again, higher than we saw back in the early 2000s when corn prices were at $2 a bushel or lower. With respect to trade, we're seeing robust trade in coarse grains. We are expecting to see a slight decline again this coming year relative to last year, just due to the fact that we've got a significant amount of corn stocks out there. We've had, as I mentioned, record production. Turning to oilseeds, similar story again. World soybean stocks and supplies are abundant this year as a result of consecutive years of record harvests in the United States and South America, Brazil and Argentina, for example. Global stocks of oilseeds, about 80% of the total global stocks in soybeans, for example, about 80% of the total for oilseeds are projected at a record this year at about 79.3 million metric tons. And so with those abundant stocks in countries, exporter countries, and projected growth in some import demand, we're expecting to see modest demand growth globally. Nevertheless, soybean prices are expected to be roughly 40% of what they were 3 years ago. Again, down from the record highs that we had after the the 2012-2013 year, and now we're expecting to see soybean prices at roughly $8.90 a bushel, roughly $9 a bushel for this year. Again, Brazil and Argentina are expected to continue to compete strongly in that market, particularly with the exchange rate devaluation in Brazil. Their exports are going to remain very competitive. Similarly, Argentina has recently reformed some of their export controls, eliminating export taxes and export quotas for wheat and corn, and significantly reducing those for soybean and soybean products. So we expect in the short term export competitiveness from Argentina to expand.
What are the USDA's expectations for global production, trade, and prices for wheat, feed grains, and oilseeds in the upcoming 2016-2017 crop year?
Okay, so looking forward, it's what you would likely expect just looking at what we saw this past year. We're coming off of 3 consecutive record crops for wheat, for example, led by records in the EU and several large Russia crops as well. Worldwide yields have also increased, and we've had record yields over the last several years. As a result, we're expected to return to more normal yields and a slightly lower acreage globally in response to those low prices. Trade is expected to go down slightly this year in wheat, again due to those large stocks that we're seeing globally. Coarse grains, again, similar story. Lower market prices will likely mean area reductions in this coming year in the major exporting countries. In the absence of any unforeseen weather shock to supply, we would expect stock levels to remain relatively high going into this year and ending at near record high levels. For oilseeds, we're likely to see, again, we've seen oilseed prices down relative to the last 3 years. Production will be little changed. We're expecting to see slight increase in yields globally, but a slight decrease in area plantings, and therefore we're likely to see relatively little change in oilseed production.
Dr. Johansson, what impacts do you see currency exchange rates having on global agricultural production and trade over the next year?
Well, that's a great question, one we're certainly looking at this year, particularly, and we'll focus on this at our upcoming Agricultural Outlook Forum here in Washington, D.C. at the end of February, where we'll update all of our production and trade numbers for the coming year. But one thing certainly that we're looking at this year relative to previous years is the increased strength of the U.S. dollar. It's been increasing relative to our competitor currencies, such as in Canada, South American countries, EU, as well as the former Soviet Union and Russia. The increase in the dollar strength has it made it more difficult for our producers to sell in export markets. And so for wheat, for example, we're expecting to see reduced competitiveness for U.S. wheat exports moving forward, particularly with respect to the EU, Canada, and Australia. We would expect to see a loss of some market share to those countries. On coarse grains, similarly, the strength of the dollar diminishes U.S. competitiveness relative to some of our competitors, such as Argentina, the EU, Canada, Brazil, Russia, and the former Soviet Union. Due to the fact that some of those currencies are losing value relative to the dollar, it may be that despite the fact that prices for those commodities are coming down, producers in those countries may see a higher price than they otherwise might have, and so we might not see as much area decline as you would expect, given the fact that stock levels are so high right now and prices have softened so much. Excuse me.
Perfect. Well, we're out of time now, but Dr. Robert Johansson, Chief Economist for the United States Department of Agriculture, thank you so much for your information and time with us today.
Sure. Thanks very much, Julie. Thanks for having me here.
And Dr. Johansson will be back for another interview on Market Prospects next week, so please join us again in February for that interview. Stay with us for now. Farmgate will return right after the break.